Everybody, this is Gabriel. I wish you a happy new year and a very good start in this new trading year 2020. Always use this opportunity beginning of the year to analyze the markets from a longer term perspective. So let's have a look here at the charts, like on the quarterly charts and the monthly charts of the different asset classes. You're starting with the Dow Jones. So the Dow Jones is in a clear and a very strong bull market since a couple of years, yeah, basically since the great financial crisis, right? So the moving averages are clearly aligned. For the last couple of months, well, basically the last 2 years, price has been in a sideways range. And this range has been, well, we have left this range, so price has broken free. And whenever a range consolidation forms like this over, over a long time, there's a lot of energy stored in this consolidation that's about to expand. So that's what we're seeing here. We see a volatility expansion, and I'm expecting a measured move similar to what we've seen here during this 2 year period. So we might see a series of green months, string and successive, the green and small bars that might be plotted here in the YM, as well as the other equity indices that are strongly correlated here on these higher time frames. So I'm very bullish US equities, and looking here at the measured move, well, this is the distance price can go, right? So that's quite a long distance, and the distance is basically 1,000, so 15,000 points here in the Dow Jones, which means about a 50% increase from current levels over the next couple of years. So we might see a nice bull run, and that has just started. Let's have a look at gold, the GC contract. So gold has shown some signs of life here in the middle of last year. We've seen this breakout, a big green bar, and a follow through out of this sideways consolidation that has been active for a good couple of years after this exhaustion move on the upside towards $2,000 per ounce. And this strong sell-off, well, we saw a consolidation again here. We see a energy that is stored here that is about to get released now. So we actually saw here a trigger of system 2 and the turtle pattern. So we've got a turtle pattern signal on the monthly chart, and this tells us that there's a lot of room to go on the other side, and that we should easily break the 2000 level. Well, this is the measured move, so we can expect something like this. Well, I'm usually more conservative, so my measured move is this one here. I'm expecting, having this in mind, I'm expecting a couple of years, like a 5-year bull run in gold, making new highs early on and then breaking free on the upside. Now let's have a look at silver. Well, silver is a small brother of gold, and silver is lagging. It doesn't look that bullish, but as they are correlated, well, gold has already moved quite a bit, and silver is lagging. We might actually see a catch up of in price relative. And well, silver is a more volatile instrument, so we might actually see, well, it has calmed down quite a bit here, volatility. That's contracted a lot, and whenever volatility is contracted, we can actually expect it to expand in volatility. We've got a triple bottom here on the monthly chart, and it's sitting as well. It finds a strong support on the 200 moving average. On the quarterly, it has tested that level several times. Now it's kind of a bit squeezed here between the 21 moving average on the quarterly and the 200 on the monthly. But whenever it can break out of this squeeze, we might actually see a nice follow through, starting and price moving in the 35 area from current levels, which is kind of a doubling in price. So this is palladium, the last metal I want to look at. So palladium is leading the pack. It has already broken out and has developed really nicely. So we had a clear stop run level here back from the early 2000 years, and I was mentioning that several times after this pullback that this is a nice level that we could get spiked. Well, that happened, and after this spike, we got a pullback, and the trend consolidation. So and the trend continuation. Well, clearly we're in an exhaustion move right now. We're heavily overextended from the moving averages from 8 from 21 as well. Here on the monthly, we're heavily overextended. So that's an exhaustion move that can end at any time, or it can just continue. So well, there's limited upside potential, and once this exhaustion move is over, or we might see a longer, either a strong pullback back to the moving averages, or we might see a longer consolidation, as we've seen with gold and silver. Let's have a look at the energies here, crude oil. So crude oil on the quarterly chart is in a clear downtrend since the financial crisis, right? So after the sell-off, there was a consolidation, then there was another sell-off. So again, now we're in a consolidation for a couple of years now, but it's in a clear downtrend, and price is respecting nicely the 21 moving average. And the last couple of quarters have been small bars with bottom and top wicks. Well, this tells me that we are in a consolidation, yeah, the moving average is respected. So here on the monthly, we are here in a consolidation. That is the trend following formation. It might actually develop into an S2 type of pattern, with this being the momentum move. So it's really hard to believe, but it looks like that we are, what the charts tell, that we're seeing a much lower prices here in crude oil towards the $20 level and lower. So let's see how that develops forward. Let's have a look at natural gas. Natural gas is kind of a very special energy contract. It's very volatile. Here we can see very volatile counter-trend rallies that have been great trading opportunities in lower time frames. But we can see as well, like whenever the 21 gets tested and rejected, well, it's basically a confirmation of the overall downtrend. We've seen it here as well. We've got a test of 21. We've got another test of 21, which got rejected, and we see lower prices currently at around $2. And the quarterly chart clearly is in downtrend too. It's kind of downtrending slowly. We might actually see a volatility expansion, that we might see some price momentum, as we've seen here in these early years. We might see some bigger red bars coming in, and lower prices here as well, which is hard to believe. So this is the T-bond, the 30-year US T-bond Set B contract. Well, it's hard to believe here too, but we're seeing new highs, meaning that the yields are getting smaller and smaller. That's a clear uptrend, and there's no sign of this to turn around, right? So price respects the 8, and we've just recently seen a test of the 21, very nice test with small bars respecting both 8 from below, 21 from below and 8 from above. So price is in balance here. We've seen a test of the 21 with the wick that goes beyond, and then a nice upwards move, making slightly new highs. So I'm expecting this to continue, seeing higher prices for the T-bond and lower yields. Let's have a look at the US dollar index. So the US dollar index is basically very close to the 100 index level, which is an important level. It hasn't been able to touch it or break it, but it has been there like in the beginning of 2017, and now just recently in November it has gotten close. So if price cannot, well, if you're getting that close to an important level and you cannot even touch it or run through it, that's a sign of weakness. So a failure to follow through is weakness, right? So either price is finding the energy now to break through this level, or then it's open space. We might come up to the 125 level. So that's dollar strength. Or if it cannot make this small move to be a successful upside run, well, then we might actually see a drop in price back to the level, back to the busted the S1 level at around 88. So the US dollar index can go both ways. Basically, it can crush through the important 100 level, or we might see a deeper pullback here in price. So as the last symbol, let's have a look at Bitcoin, the Bitcoin future. Well, I cannot look at the Bitcoin future because it's only 2 years old. I don't get enough bars plotted here on these long-term charts. So let's have a look at the spot charts of Bitcoin. Right, so this is the spot market of Bitcoin here, the weekly and the monthly. I'm using TradingView for analyzing cryptocurrencies. And we see here on the monthly, well, Bitcoin is not that old. It started in 2009, right? Like a little bit further back here, but it's a very new, yeah, asset to trade or in existence. So we've seen this big up run like end of 2017 to the $20,000 level for one Bitcoin, and then we saw a big pullback and the consolidation. And this is basically, well, this is an S1 consolidation that has triggered. And I've mentioned that back then, and and we had a lot of good trading opportunities like before the break, and then even after the break in lower time frames. So it has run for, you can see that. So it has run for stops. These levels, these lower highs. It has run for stops. It has been overextended. Whenever price is overexhausted, it needs a pause and a break. That's what it did here. It formed another S1 pattern that has triggered. Well, that was not successful. That's a pattern within a pattern, and it's always tricky to trade a pattern within a pattern because overall we are sideways. We're not in a clear trend. The momentum move hasn't made a new high. So this was not successful. This trade I called out. It has made a new low. And currently price is getting, is getting close to this flat line level, to the base of the overall pattern. So we'll see what comes out of this. I'm actually expecting that this support is tested so that we see new lows. The 200 moving average is very close, and this acts as as a magnet. And whenever a pattern fails, so this pattern failed, the failure of a pattern means that the base of the momentum move becomes a target. So the target is down here. So price could even come and test the last low. But as we are within an overall pattern, I don't think that we're getting that far. So my projected target for Bitcoin is to drop into the 5,000 level, and still having this overall S1 pattern being active. It's just a pullback within the first leg that it has developed. So I'm very bullish here for Bitcoin. I think we're seeing new highs above the last high, the 14,000 level. I think we're seeing new highs above the 20,000 level, and we should move, well, taking this prior move as a basis, as a measured move. We should see prices well above the 25,000 level, and my long-term target actually is the 100,000 level. So this is it. I hope that was of interest. Thank you.